My first job in crypto was in Stellar in 2014. So I came from the technology background, and now I run the company called Distributed Lab, and we do a lot of custom blockchain development consulting. So we come from the technical part, and we do it with our hands. We don't do trading, investment, anything. We just do one thing in which we are good. And obviously we see some models, we see some challenges, and yeah, many, like some say dirty things in many meanings. So we have some experience. And yeah, Anthony, please.
Hello, my name is Anthony. It's a real pleasure to be here and in a conference in Dubai. As you said, one of the few places in the world you can have a conference at this time during the pandemic. I have been in the blockchain space since the time you could mine Bitcoin with a regular home computer. So I love the technology, I love the cryptography of it, and I love statistics, and that's why I work with developing trading algorithms nowadays to improve the chances and probability for winning trades, and bring it to the DeFi space, making it available for everyone. Passing the mic.
Yeah, here we go. Thank you. Yeah, it's really nice to be here. Thank you for hosting this event, and it's nice indeed, as the other also said, that we have the time for a conference again in these very exciting times for crypto. I'm Amadeo Brands. I'm the CTO for a long time, since 2012, 2013. I got involved. At first, I was working at a bank as a consultant, and then I saw the core banking infrastructure I was working. I was like, wow, this is very legacy. I found Bitcoin, and I went really deep, and I loved analyzing token models. I love analyzing the return models, and I love to see their value proposition. That's why I also work at a crypto hedge fund, where we invest in different, we construct different products, specifically focused on DeFi. Thanks.
Hello everyone, pleasure being here. My name is Serge. I represent Hedget, the platform for trading options in decentralized way. I've been into crypto for probably 5 or 6 years already, and into the trading of crypto derivatives around, I think, 4 years or 4.5. During these periods, we have ups and downs. We built some bots, and some of them was successful, some of them were not. But in general, it was a very interesting journey. And now we're building the platform for doing all those things in decentralized way. Yeah, thanks for having me.
Hello, everyone. My name is Tabbaa. I'm one of the co-founders of a Swiss blockchain development company called Jibril. Our latest product is called Tranche.Finance, which allows you to tranche yields from different DeFi protocols into fixed and variable rate instruments. Similar to what Amadeo said, I used to work in financial consulting and saw how rubbish processes are at banks and financial institutions. And that got me interested in crypto and its potential to revolutionize the way financial markets work. So I'm very happy to be here.
Okay, my first question would be, how mature is DeFi space to invest in it from financial and technical perspective? Like, we can already tell people, okay, you can invest in Bitcoin. It's already more or less mature, even though we have 0.2.1 version, but it's already mature. And you can use blockchain more or less. There are enterprise solutions, and they work. But how mature is DeFi? Just who wants to start?
Well, there's always a risk when it comes to crypto. There's always possible for a security vulnerability that makes the smart contract not secure. So it's really important that you if you put your money in some DeFi project, make sure that they have run several tests, did decent tech lookup to make sure that it is as secure as it can be. Nothing guarantees that something that's secure today will stay secure a year from now, because there's new ways of hacking stuff all the time. But do your research good. DeFi is robust. It makes it possible for the average Joe to stake and earn money, whilst usually when the average Joes start to trade, they don't have the experience, they don't have the knowledge, they don't have the discipline, and they usually lose money. With DeFi, they can actually earn money in a more secure way. So I'm very pro DeFi, and I hope it's growing more and more. Thank you.
Yeah, so I agree with all your points, and I think security audits are very important, and stress testing, and especially also economical audits. So that's like, I studied economics and computer science, and it's basically very important to look at both, because it's not only where you can have issues with from a technical side, but also from economical side. And DeFi is basically, in my opinion, a word for just evolved token economics, where we now have a name for it, which we have protocols that use decentralized finance. But before, MakerDAO is basically one of the earliest DeFi protocols, I would say. And it evolved very rapidly. And I see DeFi as an anti-fragile system. So right now it's growing, and it's becoming more and more investable, also for bigger sizes. But there will be storms along the way. So it's still relatively risky, especially if you don't have the knowledge or the expertise to invest in this asset class. But it is an anti-fragile system, so over time it will become more and more investable assets, I would say. What I think we need to find more in the industry is like, we need to find a stronger purpose, where we had like the cypherpunk culture and other cultures, and now it's right now that we need to find that, and then it becomes more and more investable and more anti-fragile, I would say.
I think that DeFi right now, it already passed the children stage, right? And it's more on teenager stage, when you just want to break things, do like fast, without a lot of knowledge in it. And this motto by Andre Cronje, like test in production. And actually that's kind of probably motto of majority of the projects right now. So you just, you play with the money. It's like, you can make money or you can lose money because of some glitch, some bug, some exploit. And in general, it's kind of normal in the market, but we see how market is growing and becomes more mature, and more projects taking different approach, more serious approach, like testing, not in production at least. And I think that maybe in a couple of years we will see serious platforms that will be integrated with maybe some banking system, or we'll see some adoption in real world.
Yeah, I guess to answer the question very bluntly, Pavel asked, is DeFi mature? And I will tell you that it absolutely is not mature.
Thanks for honesty.
Yeah, the amount of exploits, the amount of hacks that happened. Yearn Finance is considered one of the best projects, and I lost money depositing DAI in one of their vaults last week. So I love DeFi, and I'm very pro DeFi, but I think that we're at very early stages. I'll give an example of why DeFi is promising, right? If you remember the GameStop, AMC stuff that happened, Robinhood played like God and clicked, chip, no more trading. That's not something you can do in DeFi, right? Which is why it's very exciting. It's a permissionless system, but to say that it's mature, I think is immature. No, yeah, it's definitely not mature at this stage. But what very important thing is resilience over time. Why is Bitcoin valuable? Why is Bitcoin trusted? Because since 2009, it got slapped 1 million times, Mt. Gox, regulators, etc., and it's still there. It hasn't died. So in 5 years' time, if Compound is still doing the same things it's been doing for the past couple of years, it'll become very valuable. So actually the hacks, the exploits are what make DeFi stronger. So yeah, I think we're still at early stages.
Okay, that's thanks for answering. Yeah, for me, the benchmark would be like cash. You can test cash. Yeah, you can look through and see watermarks. So any person can check that. And then you have credit card, which is obviously less secure. There could be glitches, maybe not glitches, very rare, but you can insert a card in the wrong terminal or pay online on the wrong website, but more or less it is secure. And Bitcoin, I consider it, for example, quite secure. You know, when you send a transaction with enough fee, that most likely it will occur. With smart contracts, yeah, when we need to explain to people, oh, you need to choose your select who audits the smart contract, which platform is on it, like this becomes complicated. Because I mean, for us, yeah, we know the risks. We know the basic risk is that you can lose your private key. I mean, you have the standard like in Bitcoin BIP32, how to protect your key, how to memorize it. But generally, these standards are quite complicated for normal people, right? So if you come to a billionaire, we have probably some in the room, a normal billionaire, yeah, and say, oh, you need to install the wallet and protect and remember the seed and la 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 la, they will say, come on, like, tell me where my money is. If they lose the wallet, they will come to you again and say, please, yeah, make me access again. So that's how people think. They think about something, yeah, tangible, and yeah, where you have a chain of responsibility. Now we have a new concept, right? So, and for this new concept, we need to either to educate people differently or to change the technology so it, yeah, kind of makes them feel secure and yeah, and actually be secure. So my last question about security would be, can you tell about some standards in the industry, for example, how we should, and it's a very vague question, but anyway, standards for doing smart contract audits or standards for doing certain things, or yeah, something like that. So where is it going? Where's the direction of this movement? Because we have to have standards that are, yeah, very straightforward.
Yeah, if you allow me to comment on that, I don't agree that we need to have standards. When they first came up with the airplanes, they had to crash a couple of times before people learned how you should do it safely. You don't start with standards, you start with mistakes, you learn from the mistakes, and eventually the standards are built on how to basically
sorry, maybe I meant good practices. The practices, it's like don't put your hair dryer into, yeah, bath, right? So you'll be safe. Yeah, you can use it in any other way, but don't do that and you'll be okay. So I mean, good practices more.
I do agree that we should have good practices, but it shouldn't be that would be the only things that's tested in a security audit, because hackers will look outside that scope and find something outside of the scope that's tested and then try to get in, because they want to have the easiest way in. And if they say, all right, all these things are tested, let's see what's not in the scope. Oh, I found something. Now I got access to all the people's money in that smart contract. You know, that's how hackers think, in my opinion.
Yeah, I would say to that, like, for example, if you look at Ethereum, there is like Open Zeppelin with like a lot of standards, a lot of like standard contracts that you can use, and they've been battle tested many times, and that's like really good. And Solidity is by far not the most secure language, but it's the most used at this point in DeFi. So it's the most battle tested. So there you can see very quickly which contracts work, which not. Similar with programming as well. Like, for example, PHP is not a really good language, but because it's been hacked so many times, you can see what are the exploits, so you know what to avoid. So in that regards, I think we really need standards, and I think Open Zeppelin is a very great, good way to do that. And I hope to see a world in DeFi where security auditors basically stake their reputation and maybe like some sort of token model on smart contracts. Now we have it a little bit other way around, where you can buy insurance with Nexus Mutual or Cover, and then the security auditors should stake their reputation and actually grow in popularity or grow wealth by staking that on the smart contracts, I would say.
Yeah, small comment on that. I think at the moment, the companies that have reputation, that have something to lose, like market valuation or so, can participate in consensus will be a crucial point. Because if you run if you issue a lot of assets on top of, for example, Ethereum, and reach proof of stake, then it always will be less money locked in a proof of stake than money issued on the platform. So if you take Tesla and issue Tesla on Ethereum, the valuation of Tesla is like bigger, which means that it's easier to hack the system and have the profit. So, but if big companies, for example, run the network, that is some part of it. If they do something wrong, they lose the market valuation. That's their stake. That maybe, But I'm not saying that the only way. Obviously, no. We need permissionless systems, but probably need a zoo of systems which use the same like more or less the same technology, approaches, and standards, and then they will be like interoperable.
And the example you gave about Tranche.Finance is a very, very good one. And it's maybe good to pull that apart a little bit, because like, you injected, but you also are, if you actually stayed in it, you got your money back basically. So yes, right. So they fixed the exploit in 10 minutes, and then they actually recovered it from a treasury that they control. So that they basically saved the reputation. So it's already happening, what you said, basically.
It's a good question if they can do it on a bear market. So when the market, when it's in a bull cycle, like all those mistakes, they just got forgotten, because you can print, mint more tokens and just say, okay, yes, we made a mistake, okay, and now just take our tokens, you can sell them on the market, nothing happens. But what happens when, when it's difficult to issue new tokens, when there is no demand for new tokens and market in different conditions. But what I like about the crypto market is that so many, like we have a problem, for example, one problem, and then we have many solutions to this problem. And it's like competition between different ideas how to solve this problem. And you mentioned that insurance right now evolving. So projects that previously just made some like certifications or some bug checks for bugs and stuff like that. They right now trying to issue insurance and put some collateral on it. So it's kind of backing that they proper audit, and that there is some money that can be taken if something goes wrong, because it's kind of their reputation, but in the money. Also, the industry started with bug bounties, and this process I think will continue. So you can just outsource to the like crowdsource audit of your project, and just put like large number of this of tokens for the bug bounty, and then probably someone can exploit, but in a like white hat way.
Yeah, but I think also on the auditing side, that by no means secures platforms, right? You could have the industry still nascent, which goes back to the initial point about maturity. By the way, when I said against standards, I thought the purpose was something like ISO, which like is an industry standard. But actually, Open Zeppelin is an excellent example of when you have something that's proven and tested and tried, that basically gets people to trust it. And that in my opinion is better than 10 audits.
And it's funny, we require security from the very, very new industry, and we have a legal industry where I haven't signed the same NDA forever. Everybody who sends me NDA, it's different. So really, I have to check it myself again and again and again to see there's no problem. Maybe, yeah, you're a lawyer, I know. and especially the lawyers use very unusual words, so normal person cannot understand the meaning of the words, and sometimes these words form combinations that are even more trickier and have some conditions in it, saying like if everything is wrong in this contract but this clause says it should be anyway valid. So like every contract has that. And so yeah, we need to do a good job and show that when code is law, that code is good, you know. So when the code is consistent, and indeed we can reuse the code, and I hope smart contract developers, me included, will not be charging, you know, for every version. So
Humans are greedy, so
yeah,
I wouldn't bet on that.
okay, a last question about challenges, and then we'll come to the topic of growth. I would like to comment on 3 topics that you know, people are you know, complaining. I would say, and the first is high fees. The second is yeah, like flash loans and the front running. So these things are very painful for investors, and yeah, for normal people, obviously fees are the most. But now, what would you say to, like, if investors come to you and complain, how do you usually answer them? Who wants to start?
So the I can.
You can say just DeFi, just don't care.
Yeah, you can come to us. We will handle everything. No, like the thing is that the front running is a big issue. Like if you have some capital, like I'm gonna put like 100k, 200k into a DeFi protocol, or I'm gonna do some swaps. You will be front run. And I did some whale hunting myself, and it's like you just spot different big whale addresses, and then you see them moving around, and you just lay your transactions in front of them, and that is definitely possible. And I think that's just a part of the market. And if you want to do it properly, yeah, you have to you do pay directly to the miners, and you get ordered in the block correctly. So if you
invite all the whales to the event, why they're distracted, you do your trades, yeah.
Yeah. Like yeah, I'm now having some trades done. Like that, I think you can have definitely front run protection in your trades if you do it correctly, and it's not that hard actually. And the other question was
fees and flash loans. Yeah, like issues with the security of flash loans.
Same thing with flash loans. I think front running and flash loans, and even fees to a certain extent, are just a part of the anti-fragility that the system is. So the system will have to deal with it, and it does deal with it. Like flash loans, the protocols that were stupid enough to use Uniswap V1 oracles, they got like flash loans a lot. And there's a lot of protocols that are now building that don't take that into consideration and also get hacked. That also means that only the more quality projects will eventually survive. So that will make the whole ecosystem more.
Darwin was right. Natural selection, yeah.
Well, yeah, so we're just making it much harder. The protocol itself makes the natural selection much harder. Like, you know, there's a lot of problems. Like even if you I tested this myself once. If you just open a book and you generate a private keys on some book phrases, your private keys will be hacked. So there is some there is some very funny things going on, and it's constantly getting attacked. And that means that we as an industry need to evolve and find a good purpose and mature.
And fees, okay, maybe just a little bit if you can.
Fees, yeah. So,
I mean, the issue of fees sometimes, you know, reminds me an issue. Imagine for this whole audience, we'll have only one toilet, and there'll be a guard charging us money.
Well, I would more make the comparison to like Manhattan, you know, like it's basically complaining, the rent in Manhattan is so expensive, or the rent in the centrum of here in Dubai is so expensive. Well, that's where it's happening, right? So in my opinion, especially when dealing with bigger funds, it's more about trust and security than the fees at this point. And yeah, that's my opinion.
Okay, so it's like a fee to be safe. So it's not the fee for the limited resource that might be not limited, like we can install 2 toilets here or 3 toilets, but rather, yeah, it's more like we have a secure perimeter and everybody wants to pay to go inside. Yeah.
Yeah, that's how I view it. And I do, because we're very, very early. If you look at a lot of innovation throughout history, it mostly goes like that. Like there is, okay, you see a clear product market fit. Permissionless finance is amazing. And now everybody wants it, but permissionless finance is not very easily created. So it's a small space where we can do it. And we see, okay, there's a product market fit, let's grow it. And if that's a layer 2 or another layer 1 or another, or sharding, that has to be seen. And I also look at, if you look at layer 1s, a lot of protocols forget that if you build a financial permissionless market on a layer 1, you always get fee raising issues. So that's always a problem you get.
Okay. Yeah, I mean, fees is a function of supply and demand, right? So I don't necessarily think that high fees is a bad thing. It just means that there's more demand for Ethereum blocks than any other blockchain. And eventually it'll normalize. So I don't see that as an issue.
I also like enjoy when people say our blockchain has very, very low fees. That's why, because it's not used. So.
Yeah, and I mean, look, there'll be different types that people will try to market. Like, remember in 2018, people were saying, oh, this blockchain has, I don't know how many TPS, transaction per second. Like, who cares? But yeah, it's interesting to see how that's used from a marketing standpoint. As for flash loans, I think because of the new nature of the Ethereum virtual machine, smart contracts, etc., we're going to see many different types of financial assets that we could not even imagine earlier. I like to give an example of derivatives. So the Chicago Board of Trade in like the 1950s, there was a guy that proposed to move the prices of wheat and other types of assets from a chalkboard to a digital screen. And they told him, why the hell would you do that? It's just a cosmetic switch, you know, it doesn't mean anything. And anyway, he ended up convincing them to move it to a digital board, which meant that you have real-time pricing. You can't build derivatives if you're writing prices on a blackboard. So basically the point behind this is new financial assets that we can't even think about today are going to be born because of the functionalities that we have in blockchains.
Wanted to add that in real world, I mean, not in crypto world, but in just classic finance, we also have front running, maybe not flash loans, but front running.
Robinhood model is built on that. Yeah.
So high frequency trading, basically the same. It's just realized in a different way. And high frequency trading is, you know, to enter the world of high frequency trading, you need to invest like millions and millions of dollars just to put your equipment inside the exchange. And in crypto world, it's more democratic. So anyone can front run if you know how to do it. And also the practice of flash loans, yeah, this is the big question if it's a bug or a feature of Ethereum. But I mean, it really opens new opportunities when you can when you can flash loan and just for it's basically like almost free money, but you need to know how to use it effectively. So it's basically the same as HFT trading, but instead of investing millions of dollars in equipment, you just need to understand how the smart contract works and then use it in the right way.
Do you want to add or?
Use it in the right way. That was a perfect word, actually. Each blockchain is built for a specific purpose. Like Bitcoin, it's for long-term store of value. Each block is 10 minutes. It's not meant for buying coffee. There's other cryptocurrencies that you can do that with. So each has its purpose. And if the fees are high on one blockchain and it's the most attractive one, it will stay high. Or if some other blockchain tackles all those problems and make it better, then we have competitors in the market. And more competitors are coming, but so far Ethereum is the most used for specific purposes. So it's a way of seeing it.
For the fees, I would say, yeah, indeed, people like Manhattan, and but they then build Dubai, yeah, and kind of everybody wants the same quality, cheaper and cheaper and cheaper, and we see then the robots will build houses and maybe secure perimeter or so. So I think this society will demand, low fees, so to say, and we will need to find not just the compromise, but we will need to find different solutions for different needs. So if you need censorship resistance, which many people need, and permissionless, you have to pay for that. If you need just quick transactions, secure from insiders or from hackers, you can enjoy it for much lower fee. And that's like with everything else. Okay, opportunities or growth. I would want to touch like 3 topics. First is, what do you think, which assets we will see on DeFi in the nearest future? Because right now it's more like a game for the game. So we have assets synthetically created and they don't often represent, except like USDT maybe, a lot of like existing real world value, and we will need that value in DeFi because we need to move it on. The second topic would be about how to evaluate the price of a DeFi project, because right now investors just put money, I don't know, like it's like a beauty contest. There are no formal, there wouldn't be never formal, criteria, and we need some models to evaluate like companies in the real world. And third, what do you think about the next level of, L2 protocols like Lightning, but for DeFi, so that can allow more people to join. So these 3 topics we can cover one by one. Who wants to be the first?
Yes, I would say the opportunities are massive in my opinion. There is a whole new permissionless financial market emerging, and I hope to see more real-world assets, as you say, right? Like if we just keep on going with pushing unspent transactions to each other, like, well, that's not going to last forever. But to mitigate that, you can also do risk tranching. So, for example, you can say, now a lot of people think 20% yield is normal on just USDC. Well, people can actually bet on that. So I said, well, I want 15%. You think it's 20%? Okay, I exchange that and I get quite a fixed 15%. So there you already have like much more certainty on your interest.
It's like game baiting,
Yeah, and that is, I think, a pretty good product. And if that becomes more mature, more anti-fragile, that will, I hope, to bring more savings accounts instead of traditional banking on DeFi. So I think that's a relatively okay use case. And then, of course, real-world assets. And maybe now, by being here in Dubai, derivatives of oil or derivatives of different real-world assets. I was yesterday talking with a couple of ex-high-placed people from the insurance industry, and they are looking into like, how can we bridge the insurance products on the DeFi products so we make the risk mitigation more democratic, so that everybody can take the risk side of an insurance policy.
Yeah, like even betting on lifting of COVID restrictions.
Yeah,
I mean, a lot of money flowing again in the country. So we can, if you can package it in the DeFi contract and attach to stock market movements, that would be great.
Nice example is Trump and Biden. You could bet on the presidency.
Yeah.
And Trump was trading at 84 cents, or Biden was trading at 84 cents after the election. So there was a very clear arbitrage opportunity to make. So I think that is definitely the opportunities that I see. And it's also finding more purpose. So we need to onboard more real-world assets, and it needs to happen relatively fast, in my opinion.
Okay. Anybody else wants to share insights? Which assets we will see on chain soon, or like accessed by API?
Of course, we will be seeing more and more derivatives on the blockchain. That's for sure, because it's like a natural way of evolution of the market. First, we have some assets, then we need something that is more liquid than the asset itself. Then we need to insure this, and then we need to get this liquidity again from somewhere and insure again. So that's why it will happen. More and more products will evolve. I just wanted also to discuss the question regarding the valuation and valuation of the projects. And actually, even in we have companies like Tesla, for example, right? And valuation of Tesla, they produce cars, of course. They produce more than cars, but their valuation is much higher than any other company like who which makes cars. So that's the question, how to evaluate. And even if those speculators, they go to some stocks like on the mentioned GameStop stock. They didn't value the stock because GameStop still sells some games and stuff like that. So, but GameStop is not valued so much as users valued it. So it's more of the sentiment, and of course we see like the market is driven by the sentiment.
How much would GameStop worth? Not the GameStop, but Wall Street Bets worth if it was a DAO?
That's a good question. Yeah. So
would you invest in that company in DAO?
I don't know. Maybe just put some small amount, but it's because the market right now is it's just it's following the crowd, and on the bull market maybe it's a dumb strategy, but it's the most effective strategy on the bull market like this. You just follow the crowd until it ends, and when it ends, then it's good. It's good if you can hedge. That's perfect if you know how to hedge, maybe how to ensure your positions. It will be even better for you when everything ends. But before that, it's just party that is going on.
Yeah, Amadeo, by the way, if you think the tranche of risk is interesting, that's exactly what we're building. So I'd love to pick your brains on that afterwards. In terms of which assets will come on chain, before doing this tranche system, we were moving traditional financial assets onto Ethereum, and we realized that there's no product market fit. What I think will happen is something called technology infrastructure inversion. And that's basically once DeFi becomes big enough, you'll have assets created from the get-go digitally. So for example, books used to be offline and they would be digitized and moved onto the internet. Now you have books going from the beginning online, and then you have ones that are on offline copy.
Why there is no product market?
So the demand side, the reality is the demand side isn't quite ready yet. Like if you're going to buy a sukuk that pays you 4%, the technology risk of using smart contracts outweighs the efficiency of doing it that way.
That's my first question.
Yeah, but for degenerates,
maturity, yeah.
So, but for degenerates like myself that wouldn't be satisfied with 4% interest, we would go and seek yield across DeFi platforms. Similar to cars, like when cars first came out, they used to ride on gravel or sand roads. And then once people realized, okay, shit, cars are actually important, they started using paved roads. The internet used to run on telephone lines. Remember, there was the modem and whatnot. Now you have cables dedicated specifically to the internet. So I think we're still at that stage where in order to get into crypto, I need to wire through this dinosaur Swift system. But in 10 years down the line, I don't think we'll have to do that. Everything will be natively on-chain.
I agree with you, and still think that the entire blockchain space is still young. There is a lot left to happen. Taking real world assets, example gold, to blockchain, it's already there, but it doesn't have the liquidity. The spreads are way higher, so you cannot compare it to the Forex market, whereas so many institutions, so many bigger players that trade gold on that market compared to the crypto market. So it's still young, it still have a long way to go. And you spoke about Tesla. Yeah, Tesla does have a market cap more than most of the other auto companies combined, but the Bitcoin suppressed the market cap. Bitcoin has a higher market cap than Tesla right now. So what is a real world asset? Isn't Bitcoin a real world asset in that case?
It's the most.
I don't know. It's a question to ask.
Okay, unfortunately, yeah, I've been told that we need to wrap up in 1 minute. So, yeah, and in Bitcoin, sitting at home, you can use Bitcoin, but you cannot use Tesla when you sit at home. So maybe that's why. Yeah. Okay, that was very interesting discussion. I hope we'll continue in outside of these doors. So thanks you all for participation. Unfortunately, we have a little bit less time that we're supposed to, but yeah. Thanks a lot. Thanks audience for listening.
Thank you.
If you have questions, we don't have time for questions. Yeah. Okay. It's okay.